Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, March 19th, 2012 is sponsored by Realtik. All right, let's get right here and started. The markets are slowly grinding higher today again, and this is a common theme since the beginning of 2012. I think we're all pretty much used to this at this point. NASDAQ is trading the best of the day, led by Apple after Apple announced a small share buyback of about $10 billion. $10 billion sounds big, but when your company is worth over a half trillion dollars, $10 billion is kind of on the smaller side. And then they announced a dividend, which essentially is a 5% dividend per year or so. All right, and again, that's what I'm seeing right now. Apple, again, trading up about $12 on the day or 2%. That's leading technology. NASDAQ's up 30 points or 1%. S&P's up 9 points or about two-thirds of 1%. And the Dow Jones Industrial Average is lagging the market up just 30 points on the day, less than 1/4 of 1%. What's lagging in the Dow? I mean, what's causing the Dow to be weaker today? The answer is IBM. It's not down, but it's not up. And IBM right now down 1 penny on the day or right on the flat line. So obviously that's not helping the Dow catch up to the rest of the market. And in addition, if you look at Caterpillar today, Caterpillar just turned positive up 31 cents. A lot of these Dow stocks are flattish or just slightly positive, making up for that 1/4% rise on the Dow. They're not really surging like the rest of the market, like Apple, for instance. All right, we also have good gains out of Google today. GOOG up $10. If you look at the daily chart on Google, very intriguing daily chart here for a couple reasons. Number one, as the chart surges up, you have a possible time count that could come to fruition, which is part of the In the Money Stocks methodology. In addition, you have to be looking for a gap fill right here. And this is going to be the target for me, at least on Google short term. You have to expect it to get to gap fill, which is right around the $640 level. All right, once you get to 640, my anticipation is a pullback in Google based on the fact that this big gap down here, which you would then have filled, was based on the earnings that disappointed in the last quarterly announcement. Okay, and again, that would be the result there, and you'd have negated it. There are a lot of people that owned Google right here that are going to look to take off for flat trades, meaning that they've finally struggled all the way back to the flat line. They're getting out of that trade right now, and that's going to create that selling pressure to kind of stop it right there for a short amount of time at least. All right, so that's also having a good day for tech. Amazon's just up 88 cents, but nonetheless positive. Microsoft is lagging, which is kind of nice since I'm short Microsoft, but Microsoft is lower, down 25 cents today. You can see the 2 days in a row is a key factor that I'm keeping an eye on here. Even though you have the 20 moving average as support, again, nonetheless, this is lower 2 days in a row, down 25 cents after Friday's decline as well. All right, let's go back to the SPY and just take a look at a couple odds and ends here, folks. This is the daily SPY, but we're going to focus more on the intraday. And looking at the intraday, if I zoom out, again, you can see early last week we had a nice up move, and then starting this week again, we're seeing a decent little up move, 93 cents on the SPY. The short-term targets that I'm looking at right now would be in the 142 to 143 range, and that is a major, major level there. So 142, 143, very, very important level on the SPY. Keep an eye on that one. In addition, short term, you have a consolidation pattern here on the chart of the SPY. It looks like it's trying to play out. This is bullish consolidation. Notice the green candle up with the sideways consolidation candles, pause candles. That again is known as bullish consolidation in spirit of bull flag pattern. All right, so again, that leads you to believe you might have a little bit more of an up move in the markets. In addition, it's almost 2:30 p.m. Eastern time here, and we have only done 85.5 million on the SPY. So again, these Mondays are very light in volume. You had a little excess volume this morning just based on the Apple announcement. It was interesting. The Apple, we heard last night when I was doing the No Hype Live, which is part of the Research Center, we heard about this conference call today for Apple about their cash. We all knew the dividend was going to come. Initially, the stock before the announcement came this morning was trading at around 610, 608, somewhere in that vicinity. The announcement comes, it disappoints. Initially, the stock trades down to about 580, 578, and is now back to about 598. So it's kind of been right in the middle range. It's as if, all right, well, it's good news, and you have a lot of dividend funds buying the stocks and so forth. But at the same time, it's not as good as it could have been. They're going to essentially keep that 100 billion on their books and just use the excess cash that they're making now to pay out the dividend used for the share buyback. Okay. All right, so let's take a look at a couple other things. If the markets are up today, let me just ask you this question: where do you think the dollar would be? And the answer would be you would obviously assume the dollar is lower today. Taking a look at the UUP, that is the case. A lower dollar today, which is obviously helping the bullish case in the markets. Remember, the markets trade inverse to the dollar. So if the dollar's up or down, the markets will be in the opposite direction. All right, now taking a look at gold today, GLD up 31 cents. Really not that good of a move for the drop in the dollar. But again, always remember that gold, it does get affected by the dollar. It goes down usually when the dollar goes up and goes up when the dollar goes down. But gold is also a security play, and there's a lot of investors dumping gold trying to get into the market and capture lightning in a bottle. And that's again why you see probably a little bit of a weaker showing on gold today as well. If we look at silver, SLV, let's take a look. SLV percentage wise is doing better, even penny wise, and it's a much smaller priced ETF than the GLD on the SLV, but that is up 50 cents, and that's going to be a little stronger. Yes, it's a store of safety, so you have some money exiting, but remember, it's industrial, it's an industrial metal as well. Therefore, if the economy is really as good as people think right now, that's why silver has a little bit more momentum today. Okay? Let me just see here across the board. A couple things just to note for those of you out there that are interested. I had an MA short out there today, or actually it was from a couple weeks ago. I was in the money, in the money, in the money. Based on today's momentum, it hit my break-even stop, so I moved out for a flat. And again, this is part of the discipline we utilize here at InTheMoneyStocks.com. It's all about understanding and kind of controlling your emotions, never letting emotion get control of you, understanding when to put in a break-even stop, which are the master levels, and playing them accordingly. So today, I moved out on a flat trade on MasterCard after it was in the money for me decently, and then it came back to my break-even. And in addition, the other trade that I moved out of today was my second half of DHT for a 100% gain. So this small cap I gave to my members, folks, early in the year, right here at 75 cents. 75 cents right here. And sure enough, the stock went up. I sold my first half for 36% profit. My second half target was a 100% gain, and that got triggered today. So again, good profit there. And what can you say? You know, the flat outs are fine, no harm done. Now you take 100% profit on the DHT. I'll take it every day of the week if that's the way it's going to roll. So we'll see again with this market as we continue to see how strong it is and it's kind of grinding up on light volume. The big question is, you know, when do we finally see any sort of pullback? My guess is soon, but again, we need to see a little bit better volume than this to get that to come in. Join the 7-day free trial here at InTheMoneyStocks.com, folks. There's a 7-day free trial. That 7-day free trial is for the Research Center, which is geared towards swing traders, and the intraday stock chat, which is geared towards day traders. All right, again, come join the elite pros. Start learning the proprietary techniques here at TheMoneyStocks.com that has enabled us to swing trade the market up and down nonstop since this company was formed 5 years ago. And again, learn for yourself, have success in life trading, make money forever, as far as I'm concerned. Take care, guys. Again, we'll see you here at InTheMoneyStocks.com.